Thanks, David, and thanks for coming along to the blue chip session after lunch. I know some people are probably outside enjoying the sun, and thank you for coming along and listening to the pharma and biotech sector. I'm Michael Kotsanis. I'm the CEO and Managing Director of Acrux. I've been with the company for 5 years, and David underestimated or glossed over a bit of my history. I've been in the sector for over 30 years, so I started when I was 12. Please refer to our forward-looking statements, and this has been published on the ASX. You can read that at your leisure. What is Acrux? Acrux is a pharmaceutical company that's been around since 1998. We actually spun out of Monash University with some intellectual property around applying drugs to the skin, or topical. Topical meaning application of drugs onto the skin to get either a local effect or a systemic effect. And that's all we've ever done for 20 years. In that time, we've commercialised a number of products. Some of them are still on the market, and we now have an emerging pipeline, an interesting pipeline. Some of those drugs of which have been submitted to the regulator in the US for review. In the last 4 years, we've invested over $34 million into research and development. We now have an active pipeline of 14 different drugs, all targeting the US market, all topical, which is our DNA, our history, and all progressing quite nicely through our pipeline. We expect next year to do 1 to 3 licensing deals, and the following year we'll do 3 to 5. And it's easy to stand up here and put forward-looking statements together, but why would you have confidence that we can do that? Part of it is our history. We have a number of products that have been commercialised. Our estradiol spray, which we developed and licensed out in different territories, is on the market in 34 different countries, 33 with one licensee and the US with another licensee. That grew last year by 77%, and we expect sales of that product generated for Acrux to exceed $800,000. We also had a testosterone solution on the market that generated substantial revenue for the company. That was on the market, and we paid a number of we received a number of royalties and milestones and paid out dividends on that product to shareholders between 2010 and 2018. If you look at Acrux from an investment perspective, we like to break it up into our pipeline, our team, and where our pipeline's headed. So firstly, let's look at the market. The market we're focused on is the US market only. The US market is a substantial market, but we're not interested in every single product. We're interested in the topical market, and that market itself is around $20 billion in the US. It's a niche at $20 billion, but it's a substantial niche, and there's a large number of drugs that are applied topically. The team we have, I'll go through the team in a few slides. It's a team with a variety of experience, but all with experience in the sector, and it's a team who know what they're doing. And the third thing is we've invested substantially in our pipeline over the last 4 or 5 years. We've been quietly progressing our pipeline. The types of products we develop don't generate big milestones which would generate a nice press release. That's a process we go through, and we're about to start commercialising our products in the near future. Our business model is quite simple. We identify the topical generics that we are looking to develop. We do that through a number of ways, and I'll talk about that in a second. We then develop those products. That takes 3 to 4 years to develop those products. Once we have the know-how and understanding the product's formulation, we then transfer that know-how or intellectual property to a contract manufacturer. We file that product with the FDA, and once we've filed the product with the FDA for review, we then seek out licensing partners to commercialise our product in the US. That's been the business model for the products we've already commercialised, and that's our intention for products in the future that we expect to commercialise in the future. Once that product launches, after FDA approval, we'll receive a profit share or a royalty, and then we reinvest that back into our pipeline, which is going to continue to grow. So the market, I think the market is very important to think about. The overall pharmaceutical market in the United States is around $460 billion based on IQVIA data. It's growing quite substantially. It's the largest market in the US, and the prices in the US for any drug is generally higher than anywhere else in the world. And I can give you some eye-watering statistics of some of the product prices we've looked at compared to their Australian equivalents. Market share for generics in the US, 9 out of 10 prescriptions that are dispensed in the US are generic. Not branded, generic, 9 out of 10. The development of generics is obviously variable according to the different dosage forms, and generally there's a high amount of generic competition in the US anyway. It's driven mainly by that middle column there, oral drugs. So the oral part of the market, so tablets, capsules, are worth about $200 billion worth of sales in the United States. The generic penetration rate for those products, as you might imagine, reflects the overall market at 91%. The typical complexity in developing a generic drug in the oral space is quite simple. There's well-known and well-trodden pathways to developing a copy of an oral drug. You need to develop the same formulation. You take the drug, you give it to a group of patients, around 30 patients. You look at pharmacokinetics of those of that drug in that particular population. Once they match, you know you've got a bioequivalent product. The FDA will approve it, then you can commercialise. Our focus is on topical. It's a different sector. It's drugs that go on the skin. They don't necessarily get into the bloodstream. Some do, some don't. It depends on what the indication and what the use of the drug is for. That market is around 4% of the total US market. So in reality, it's around $20 billion. The generic penetration rate in the topical market, which we're focused on, is only 47%. And that's quite different from the overall market. Why? Because fewer companies have the capability to develop topical generics than they do oral generics. It's a smaller sector. People don't have the skill sets we have, and it's reflected in the size of the market and also the generic penetration rates. The complexity of developing a topical generic is harder than developing an oral generic. That's another reason for less competition. The bioequivalence pathways that you need to show your generic compared to the branded product is more complex. And the FDA has been very helpful in finding pathways to get generic drugs of topicals approved by helping companies like us, giving us advice and so on. In general, there's less competition in the topical space than in all the other markets in the United States from a generic perspective. Our strategy is fairly simple. One of the keys to think about generics is how you select the drug. And we'll look at a variety of different data sources selecting a drug. It's not just a matter of saying that's an interesting product. We look at the intellectual property around that product. Usually the FDA publishes what we call product-specific guidances, which is actually the way in which you develop a generic of a particular product. We look at whether there's a clinical trial required to show bioequivalence or whether there's other in vitro techniques to show bioequivalence. And those are parts of the sorts of things we look at, as well as obviously the sales data, how big the market is for a particular drug when we select a product. We also want to make sure that we have the skill set to develop the drug, of course. The development of a generic generally takes 3 to 4 years and costs around $3 to $4 million. And if you contrast that with branded pharma, which is most of the sector in Australia, the development of a generic drug is a lot quicker, it's a lot cheaper, and it's lower risk. We don't believe that we're going to have failures in clinical trials because generally we don't do clinical trials. And the clinical trials we do are really confirmatory PK studies or other similar types of studies with a small number of patients trying to demonstrate that our formulation is exactly the same and therefore bioequivalent to the drug that's on the market that we're trying to copy and bring out cheaper. That last line there, time, cost and value. So I've mentioned before the average cost for a generic product for us to develop is $3 to $4 million. Some are a little bit higher, some are a little bit lower, but that's sort of generally the range. Whereas developing a branded drug will take 10 plus years, and obviously the costs are going to be substantially higher. Once we execute a licensing deal with a partner, our typical business model is to generate either milestones and or a profit share from that product. Sometimes it's a royalty, sometimes it's a profit share. And that profit share is usually paid quarterly. And our effort involved in receiving that royalty is to book the check. We don't manufacture the product. We don't arrange the logistics for that product. We simply transfer the manufacturing relationship to a generic partner in the US. They sell it and they pay us a percentage of their profit as a business model. The size of our pipeline. One of the aspects that is interesting in the generic industry is most generic companies do not tell you what they're developing. And that's a competitive thing. That's we don't want to disclose the products we're developing, nor does any other generic company want to disclose the products they're developing, because that gives you ideas as to what might be attractive, and it helps enable your competitors. So generally, generic companies don't publish their pipeline, but they do publish different ways of analysing the pipeline. And this is one of the ways we choose to share what our pipeline looks like. The 14 drugs we have in development target actual sales in the US of $1.5 billion. That's like for like, substitutable is substitutable if you want to use an industry term. We then break up that pipeline even further. We look at the drugs that we're developing, how many generics are on the market today, commercialised today. And that big green box there, which is 987 million, is really the box that you should pay most attention to. Over half of our pipeline today has no generic equivalents on the market in the United States, and a number of them are off patent as well. And if you've been around the industry for a while, to say that we're developing a pipeline of drugs that's almost $1 billion without patents and without any generic competition is quite unusual. And why is that? Why is this quite a unique slide for a company like Acrux? Little old Acrux. We're sitting in West Melbourne, we've got 35 good people developing drugs. Why is that pipeline chart look like that for us and not like that for other companies? Because we're focused on a sector that most companies don't target. We're focused on a topical sector that most companies can't target. They don't have the skill sets that we have. So we know that a number of the drugs, so we don't know what our competitors are doing, so that graph may change over time, but we know that most of the drugs we're developing today have limited or no competition on the market today. And that's what makes the products we're developing attractive. If we've got 14 drugs and they're worth 1.5 billion, you can work out the average market size. It's around 100 million per drug, of course. There's quite a lot of variation around that. We have some drugs in our pipeline that are a lot smaller and some drugs that are bigger. And so market size is not the only driver of the way we select drugs, but it's one of the ways we select drugs. The other way is obviously, as I mentioned, complexity, intellectual property, and so on. The team is very important. It's hard to get good scientists who know and understand the topical development landscape and techniques in Australia. And if you walk around our laboratory and you look at and talk to the people in white coats, the people who do the real work in the company, there's a lot of accents. And that's a good thing. You know, we've found people from all over the world to bring into Australia, or they're already here in some way, shape, or form, with skills that are directly applicable to our business model, which is developing topical generics. And I don't know of any other company in the world that is a pure play generic topical company. There are other companies that do what we do, of course, but they also work on orals or injectables or other dosage forms. So myself, I don't develop anything. I know enough about development, of course, but we have a group of dedicated scientists who develop drugs. But I do know the industry. I've been involved in the industry for 31 years, 20 of that specifically in generics, 10 of that specifically in Europe. I ran Hospira, which is the largest generic company in the world. I ran the European business, which is $550 million of sales, US. As Chief Commercial Officer for Synthon, which is a €250 million company, operating in about 18 different countries, mainly Europe, US, and Latin America. Felicia is our head of R&D. She's been with the company since 2001. All she's ever done is worked on drugs that go on the skin. And when she speaks a different language. It's English, but it's highly technical, and she knows what she's doing. Charlie's been in the industry also for a long time. He's a pharmacist by education, has worked at GSK, but also at Hospira and the Old Main Pharma, so also understands the generic sector. And then we have a CFO that actually does understand us, but is certainly not a scientist. The way we try and identify drugs is the next part. You've got the team. Now, how do we identify the drugs to put into that team? There are 176 different drugs, or molecules as I like to call them, drugs, that generate over $10 million of sales that are applied topically. So 176 drugs is a lot of drugs. We've got 14 in our pipeline. Those drugs can actually be applied in different ways. Some of them are creams, ointments, gels, pastes, solutions. Topical drugs can come in a variety of different dosage formats. Each of them have their own opportunities and challenges and different characteristics in terms of why someone would use a cream versus an ointment, or a gel, or a paste, or a solution, or a spray. I can go on. So there's an enormous number of drugs that we can think about, look at, identify, for our future development targets, and we agonise over those decisions. We often are sitting there looking between 3 or 4 different products, thinking which one's the best one to do next. It's not just a business case; it's a complexity. It's the time to develop. It's the cost of development. So far, those 14 products have generated 3 dossiers that we've filed with the FDA. We said we started with 3 products in our first year. We added 4 to make it 7, 5 to make it 12, and now we're up to 14. Those first few products are now starting to be filed. So we filed 3 products, 2 in 2018, 1 in 2019. They've been accepted for review by the FDA and are under the review process. We expect to file another 4 products next calendar year, I should say, and on the cycle we'll go. And once you've filed a product, filed a generic dossier in the US, then you have an asset you can talk to with other generic companies for commercialising those products. And we have a number of those conversations going on right now. And we expect to do 1 to 3 licensing deals next year and additional deals, licensing deals the year after. So this is where we see our pipeline going and some of the milestones we've got coming up. Today our pipeline is 14 products, 3 with the FDA and 11 still in West Melbourne with our people either transferring those products to manufacturers or developing them when they're fairly new. In 2020, we expect to submit 4 products to the FDA for additional. 2021, we expect to submit another 4. We always want to maintain around 10, 11, 12. Around 11 is what we've put up there, but a constant number of products in our pipeline. That's keeping our resources actively utilised, productive. We also know that there's a number of other products we've got in our sites that we want to develop. From a commercial perspective, we expect to start doing deals, and once we do those deals and those products are launched, that generates our revenue and our profit share flow that either funds our future pipeline or that we return to shareholders. Some case studies, because I know that not everyone understands how the generic market works in the US. So I've got 2 case studies, not specifically chosen because they're great or anything like that. They're just 2 that we found that quite nicely illustrate the point. Tazaratene's a product that is used, it's available in Australia, but in the US, so this is a Tazaratene cream product. It's about $50 million in sales, used for acne or psoriasis, so inflammatory skin conditions. In 2000, September 2000, Allergan launched the product. It was on the market for many years without generics. The patents expired something like 2014. Taro launched the first generic in 2017, and the branded sales fell, of course, as Taro, the generic company, took share of that product. In the first 6 quarters of sales, Taro generated $14.4 million of sales, and that's now up to $17 million of sales. And a second generic launched in quarter 3 2018 is starting to take share as well. That's a fairly typical curve for a generic product. Branded companies on its own in the marketplace, generic launches, they take a share. The generic market in the US is really efficient. That's probably a little bit under what a normal generic company penetration rate will be. Generics, when they launch, usually take about 50% market share of the brand in the first month. That's an average in the US. A second example is acyclovir. You probably know this product as Zovirax. I just looked it up when I was sitting in the back before. You can buy a pack of Zovirax cream in Australia for $14.49 at Chemist Warehouse. Just looked it up. But when you're looking that up on your phones, look up the Zovirax cream price for 5 grams in the United States. And then look up the next link as well, because you won't believe the first one. So the first link is on drugs.com, and it's $981 US. Same product in Australia is $14. And that we see time and time again. And that's why the US market for topicals is so attractive. This has been off patent for years and years. Zovirax cream has been around. It doesn't actually work. If you've got a cold sore, don't bother taking it. It doesn't really work. But it sells $100 million, so it's not bad. So we're more interested not in whether the product works, we're interested in the sales value, because obviously we want a chunk of that. Solgel's a company I don't know. I've never met them personally, but they've got a number of branded and generic products in development, in particular generic topicals. Their first generic topical is a generic of acyclovir or Zovirax. That's the brand. Acyclovir is the generic name. And their share price has responded. Their profit share deal with Perrigo, which is a 50-50 development and profit share split, which is not that uncommon, generated $6.4 million profit for Solgel in the first quarter, and the second quarter they generated $7.8. They probably spent $3 million on development by our estimates. That's another example of the topical generic market at work. It's the only generic. This has been off patent for 5 years. The board, who's guiding the company? The board's highly experienced in pharma biotech, and you can look across that board, and all their CVs and pedigree are there for you to read. Ross Dobinson is our chairman, has been with the company for a long time. He's one of the founders of the company actually, and is still very involved in the company. Is well known to a number of people. Simon Green is ex-CSL, had a number of senior roles within CSL in manufacturing and development. Jeff Brook is ex-GBS Ventures, has been on the board and involved in many companies in this sector. And Tim Oldham, who's speaking soon, has worked at Hospira, Main Pharma, and we'll share with you another company he's involved in a second, but has also got a lot of experience in the sector. A corporate overview. Our share price is around 18 cents. It's been that for quite some time. Our market cap's about 30 million. That gives us an enterprise value of 11. We've spent $34 million on development of our products, and our enterprise value is 11. The inference there is probably quite obvious. We think we're undervalued. We have a number of retail-oriented major or substantial shareholders, but we're on the cusp of commercialising a number of products. So I think it's an interesting time to look at the company. And I'll leave you with one thought. Two thoughts. There's 2 more slides. Our future catalysts. Where are we heading? We expect that we'll start doing deals on our assets, on our licensed products, on our products that we've put into the FDA and licensed those products out to generic companies. Not too far in the future. We've put some forecasts in this deck around that. Those deals will generate either milestones and profit share, which will generate ongoing revenue on an annuity style for Acrux. We do expect FDA approvals of our product coming in the future, and obviously we're trying to file more dossiers of our drugs as we work through the process. Next year we expect to do 1 to 3 licensing deals. We'll continue to have 11 products in our pipeline, and we'll file 4 more. In the following year we'll continue to file additional products. We'll do more licensing deals, and this is a cycle that's heading up. And the last thought I'll leave you with is we're also a pooled development fund, and most companies don't have this status. It's only 27 pooled development funds in Australia. It's part of the Pooled Development Fund Act in 1992 that was set up by the government. Any capital gain or dividend from Acrux is tax-free. Any capital loss you can't write off on your tax, so that's the downside. But the upside, capital gains tax-free, dividends are tax-free. And if you think, well, that's interesting, if we paid a dividend, we paid $1.06 in dividends between 2010 and 2015, and we got 166 million shares on issue, which is $166 million back to shareholders. Thanks for your time.
A question. We can take probably just one question. Here we go.
In terms of the Indian generic market, fairly significant players there. How do you stand in terms of the competitive advantage?
Yeah, I've been in the industry a long time, and the really big change in the generic pharmaceutical industry is the makeup of the top 10 pharmaceutical companies. There's 140 generic companies in the US that had a product registered in 2017, and the top 10 has gone from being an Israeli company and mainly American domiciled companies to 5 out of the top 10 being Indian companies. And there's some really impressive companies there. You know, I know them well. I talk to them, and they execute beautifully. They're mainly focused on orals. I mean, that's the biggest sector. Every single generic company in the top 10 has a substantial oral portfolio, because there's where you find the drugs worth $1 billion plus. No topical drug in the marketplace in the US is over 600 million. So it doesn't get the attention of the big pharma companies or big generic pharma companies, because they're actually, to spend $3 or $4 million on a $600 million drug sounds like good economics. Why not target a $5 billion drug? The most recent drug that got off patent that was over $1 billion was Lyrica, which is $3.7 billion oral from Pfizer. 13 companies, and the Indians were there. The Indians are very impressive, and we'll look to partner with them with our products as we will anyone. But they've made a serious difference to the industry and driven share and volume.
Okay. One more.
You're talking about running on an annuity business model, so you're converting product into annuity streams, as I understand it. Is there any intention to convert the opportunity from time to time into capitalisation of those annuity streams?
To spin them off into separate assets? Yeah, maybe annuity is the right word. Our intention isn't to spin them off. But it is an interesting concept. If you look at our on-market estradiol spray, we've generated over $1 million in revenue on that product in 2 years. It's going to exceed 800,000 this year. We don't spend $1 on cost on that product, maybe $1 because I just spoke about it. But that's it. So you could spin that off. I mean, not saying we want to, but you could spin that off and give it some value. But that's not our intent.
Every other annuity product that I know of in the marketplace has a capital value. Especially when you're utilising a partner to distribute, it has a specific capital value to them. So it's an interesting concept.
Yeah. The annuity concept for us is very much about the recurrence on a quarterly basis of revenue, something like an annuity. But I like the analogy. Yeah.
Okay, thanks, Mike.